All right, guys, welcome back to the channel. So today I want to talk about our individual portfolio, give you guys an update. We did inject a bunch of cash last month into the account during the dip, ended up buying into a lot of positions and expanding the portfolio. So let's go ahead and jump into the tablet and I'll share all the positions, and we'll also talk about the dividend tracker, which we're going to use to show you all of our assets because it's over different brokerages, different accounts. But we can also talk about what it thinks we're going to get paid monthly. So let's jump into the tablet here. All right, so now we're into our dividend tracker here. And this is our dashboard. So this shows what we call growth, which is our retirement accounts, and high yield dividend portfolio. Now we are holding cash in these accounts that is not reflected here, but it kind of gives you an idea where we're at. So if we jump to the high dividend yield portfolio, you can see we're at 153,774. Says our dividend yield 68.44%. Our yield on cost is 56.42. Now it's showing the May income as 7,358 and our annual income at 86. Now I don't know that I would say it's going to be that high. It's going to fluctuate, and also because yieldmax has revolving pays, some months you're going to get some of the real high paying ones twice, some months you're going to get it less. Now on this payment schedule of this month, Coney pays twice, which is not that big a yield, but I definitely feel like it has gone up. I believe last month it was trying to tell us it was going to be 5,000. So I don't know that I would say it's going to be actually 7,000. 6,500 I think is a better number to use, but I digress. If you are interested in Dividend Tracker, they have free and paid plans. I'm on the actual paid plan, but I still manually put our numbers in just because I don't want it linked to my accounts. I don't think there's anything wrong with that. That's just me. I do have links below if you want to go check it out for yourself. You can just use the free version. Their calendar, honestly, is, it has a hard time with some of these newer weekly or some of the yield max that rotates. But over time, it pretty much straightens out throughout the month. I don't think it's a bad tool to have. But let's get on to the positions. So we now have 121 shares of AIPI by Rex. I still think this has opportunity. We're just going to have to wait until tech starts to run really hard. I know we've been in a nice little boom and recovery here, but we're still not seeing the true run yet. I think when some deals get signed, it'll take off. So we're still holding our Curve funds. We don't have many of each of these, but we're not getting rid of them. I think Curve does a really good job. We got 13 shares of their AMZP, and we're just going to hold them. They're not going anywhere. They always pay well, and it's just consistent. I feel like over time they're going to do really well. Now our next position we added, and we bought a bunch of it, which is BTCI. So between me and Missy, we have 97 shares, and we caught the first payment last month, and it paid out really nice. I think it was like 30%. So I have no complaints, and we're up almost $10 in share price compared to what we actually bought it at. So I'm definitely not complaining. That was a good position. Next is Coney, which I said is going to be paying twice this month. We're at $1,500, and if you didn't see it in our previous video, we talked about how Coney basically is our biggest loser. And even though Coinbase got added to the S&P 500, the underlying, it really hasn't really taken off like everybody thought it would. We're taking all of our dividends from Coney and reinvesting it in Platy, PLTY right now. And then in the future, it'll probably go into QQQI. So as we go down, you also have FEPI, which is another REX. I really do believe in the REX funds. I think FEPI has been an underachiever because they're consolidated rather than going index. But once again, if we get a tech run, it's going to take off. But it has been recovering nicely this far. Another one of our favorites is Goop by Curve. 22 shares. I really think that it's going to do well over time. It has to have time to recover, though. These are covered call funds, and they really do take a while to come back. Next is Misty. We all know Misty just pays and pays and pays. 1,508 shares. Now, we have already had this position completely paid off. So everything we get now is just gravy. I'm not stressing it. I know a lot of people are scared about MSTR, which is its underlying, being the Bitcoin play and their bonds and all the stuff they're doing. I'm at the point now where I'm just going to collect and not worry about it. All right, NFLP, another curve one. Only have 2 shares. I actually wish I had more of this, and I might try and get some in the future. But an excellent performing curve fund, and I'll be honest, I think it's one of the stronger of their funds. Next is NVDY. We have 1,033 shares. Now, everybody's seen the chips turn around. All right, we're starting to bounce back, share price starting to recover. A lot of people wrote off NVIDIA. I never did. I said I was just going to hold it, whatever it did. And it's starting to recover. Obviously, we got a ways to go, but it's looking good at the moment, and I have no problem holding these 1,033 shares. Plady. Now we're building a position. This was another big buy for us. We are at 188 shares, and it's looking like a strong possibility it could be paying over $5 this month. We will find out Wednesday. For you guys, that'll have been a few days after or before this video comes out. So hopefully we're getting that $5. If so, please go down and comment what the payment is so I can see you actually watched this far in the video. Next one is my personal favorite, QQQI. We have 223 shares of QQQI. Neos does an excellent job of managing their funds. A lot of people discount the fact because they say, well, they're only a 14% yield. But when you figure out the return of capital, if they repeat the process from last year, and then their tax efficient strategy after that, where it's 60-40 split, the yield wipes out a lot of funds that are doing like 20% because it's all about how it's taxed. So, loving QQQI, want more. Next will be TSLP, another curve fund. Now I put the brakes on this because we're really trying to pull away from anything Tesla based because it just bounces too much. But it's important to understand that this thing continues to pay, and I think they do a good job managing the strategy, but it's still, price will drop up, drop down, go all over the place. TSMY, we have 100 shares of this. This is just because the first week distribution schedule for yieldmax is very weak in my opinion. The options are not that great, and this is just what I chose. It's a little something, so that week we get a little extra. Now, next is XDTE, another one of my favorites, and another one we did a huge buy-in when we injected the money last month. So we now have 478 shares, and every week we are getting a nice payment. It's really nice to have that extra cash every week to be able to do different things. We are living off this portfolio, so the weeks that we pull money out, that goes in there. That's really nice, but also the weeks that we're not pulling out, it goes back in to help us sell more options. Next is YBTC. I'm still just holding this one position. I'm not really that interested in expanding this position right now. I will wait to decide if I want to judge this on the market recovery and Bitcoin zooming up and down. So I'm just watching it. It's definitely not performing as well as Neos's fund, but it is decent investment. All right. Last but not least is YMAG. Now we have 1,076 shares of YMAG, which pays religiously. Now they've been averaging like this 9 or 10 cents. I think they were trying to level it out. But my guess is every few payments they're going to have to put out a bigger one because the fund makes money and it has to put out so much of it. So last week we had a 19 cents payment, which translated to something like $190 between our two accounts. And that was pretty amazing. I'm going to be honest. You know, to see it basically almost double what it has been paying in a week was really nice. I do see some share price recovery. There is still life there, and I'm hoping that over time it will click back up the hill. But if not, the projections on how it's paying right now looks like another 10 to 12 months it should pay itself off, hopefully. We are not averaging down, and currently we're not buying in any of these. But I do need to jump to another screen to share with you how we are doing on options, because we do have assigned options that I wanted to share with you guys. So what we have is, first, we are holding 2,900 shares of MSTU. All right. Now, we got assigned these quite a while ago. And having these shares, we have been selling longer dated because the price we're assigned at is higher and we're not trying to lose any money. So every month or so, we just roll them at the first of the month for payment. Now, the last time we rolled them for a massive payment, and it's a 3-month roll on top of, so these are out till like December. And the MSTX, we have 400 shares, and once again, these are out for December. So there's going to be a month or two, maybe 3, before we can roll these again. If they go high enough that somebody wants to early assign them, that's great, because we're making our money back. If not, we'll just keep rolling them for profit. It's not a big deal. All right, so we have NVDX, 200 shares, and that is out till November, I believe. And I roll these every month. There is room to roll them farther, but I've just been keeping them closer because it's starting to creep up on the share price. And I want to make sure I can take advantage of that if I want to exit the position. Soxel, we have 200 shares of that. Not getting in a hurry. I think my cost basis on those is like $23, which is high until I see other people with $35 and $32 cost basis, and I don't feel so bad. I am probably going to average down on this position, but only once I get out of some of these other ones. So CLF, that we have 300 shares of. Now, they just closed some of their factories. They didn't really close them. They idled them is the word, so they're laying people off. They pay into it, so when you deal with steel and stuff, people get laid off all the time. But the price is starting to settle off. I think I'm at about $8 or $8.50, and I think it's playing around now between $6 and $8. So I'm making money every week. I'm not in a hurry to get rid of the shares, but when it happens, it happens. So UNG is one of those that has multiple expiration dates in a week when you're selling options. And we have 400 shares of that. And I think $17.50 or $17 is our average cost. This is split between my wife and my account. But it's been averaging between like $15.90 all the way up to $18.50. And since it's futures, it moves around a lot. We do own the shares though. So once they get back above, they'll get called away. But selling it twice in a week is producing some really nice income, and I have no complaints. And then we have Beyond. This is 1,200 shares that my wife is holding. Beyond's our biggest loser of the year. I actually had to take losses in my Roth and in my individual this year to get out of these positions because I was so far underwater. They did secure some funding, so they are on their way back up. But I'll be honest, I don't see much of a future for Beyond. They have too much competition. Now there's a lot of stuff that comes from overseas that they're having problems getting. The market is not buying as much. Coming from people, hanging out with people that are vegan, coming from eating with them, I understand that there's a lot of products out now that are far superior to the Beyond products, in my opinion. Not that they're bad, but when you look at cost and the products that are out there, there's a lot more competition now. So Beyond's losing their edge. So I would not be surprised if my wife doesn't sell the Beyond shares next time they rally, giving back some of her premium to basically break even. But that's been our biggest loser this whole year, is Beyond. It just is. That happens. But if 99% of your trades go good over the year, essentially, and 1% go bad, you maybe take a loss even, that's still great. And for those of you who don't fully understand, we have our individual portfolio I just went over, and then we also sell options with margin against this portfolio to basically double our income off one portfolio. So we've gone over the portfolio. I've shared with you guys what we have in it now that we've expanded it. And I've told you guys about the positions we're assigned in our individual accounts. So you can kind of figure out what the value is, because the dividend tracker shows it at 153, but all those other assigned positions, we'll let you guys know that we're closer to about 180, 200 range, depending. So we have this portfolio to where it's generating plenty of capital to fund our lifestyle. We still do some other things to make some money, but we post our numbers every month. We're very clear about what we make. But it's easy to look at those numbers and be like, they made 10,000 or they made 15,000. That's not all ours. All right. So you have a reinvestment you have to do. So you have to pay taxes to just basically put 25% off that. So if you really take 50% out, that's probably what we're actually making. Now, we would be living quite well on that. But we are in the process of doing a lot of renovation, finishing the tiny house here so we can get moved in. I've got a new project. If you go check out our other channel, the Frugal Homestead, you will be able to see some of the projects we're doing. But we're also getting ready to fix up our main house and put it on the market. Now, that's probably going to go all in Neos funds when we get that money, which at that point, we'll have more than enough to live quite a higher lifestyle than we probably need. But what I want to encourage you to do is not copy us. It is to educate, learn, find what strategy is best for you, whether it's index funds, dividend, doesn't matter. Find a strategy to make money on your money, to make your life better, maybe retire early, maybe just be ready for retirement, whatever it takes to move your life forward. Now, it's important to understand that we are not special. Nobody gave us a bunch of money. Nobody did anything like that. We are just two regular people who did this, and you can too. A lot of it is just about learning. It's the education part. People get scared of doing options, and there's reason. If you buy options, be scared. If you sell options, it's more like you're the casino and the other guy's the house. The odds are in your favor. But once you learn to manage risk, once you learn how to do these things, you can produce a sizable income to either help your family grow or to live off of, like we do. It's not rocket science, guys. You'd be surprised how easy it is. But with that said, if you haven't already, and I don't know why you wouldn't have, go down, hit subscribe, hit the notification bell so you see all of our upcoming videos. If you don't mind, give us a like. It really does help. And we will be back very soon with a whole series of selling options, including selling options on a small account, because that's what some people have been asking for. And we will literally walk you through selling options on Robinhood. So I will see you in the next one.